right, we are live. You guys are all good.
Thanks, Kate.
Let's call it to order. It's the Dewey Investment Committee meeting. Brian Prevor, the chair of the committee. We'll take a roll call first of our committee members. Start with you, Dennis. Dennis is here. Jimmy?
Here. Yep, Jimmy and Lee.
Bernie?
I'm here.
Bernie is here. Michael Schaefer?
Here.
I think that's the whole committee. And Bill Stevens, you're our commissioner rep.
Good evening, everyone.
And we have a couple other guests with us. Looks like Commissioner Persinger.
Yes, hello.
And Bill Zolper as well, I see.
Good evening.
And Sheena Gossett.
Evening.
I think that's everybody. And Kate from town. Looks like our first item on the agenda after a roll call, and I don't think we need a short introduction. We've done that in the past. There haven't been any changes to the committee. Why don't we go ahead and take a review and vote on the previous meeting's minutes. Bernie, I believe you prepared our minutes last time.
Right.
And if you want to give us a quick summary of the minutes. Has everybody had a chance to review them? They were circulated some time ago. Does anyone have any comments or questions or edits to the minutes?
Oh,
Bernie, do you want to give a quick summary of them?
Okay, let's see. Some of the highlights, we reviewed the financial statement. Bill Stevens sat in since the town manager was new. We discussed the structure of our investments and how we currently have 3 funds. The investment chart calls for 2. Then Dominic from Brown Advisory updated committee on our investment strategy, current investment environment. We then had a discussion of the retention versus the general fund versus the operational fund and how they're related. And we discussed moving some of the monies to fixed income funds with liquidity and low risk. And then our final item was discussion of the investment implementation plan. And we're interested in the short-term needs and what are longer-term plans.
Okay. I think that just about sums it up. Before we vote on it, any comments or questions or edits on the minutes? And then why don't we have a vote to approve the minutes from the last meeting? So, do we have a motion to approve the minutes?
Motion to approve.
All right, Dennis, second. Any second? Second, all in favor?
Aye.
Aye.
It's like unanimous. The minutes are approved. Next item on our agenda is a presentation about the financial needs for the remainder of 2021 and planning for 2022. Our town manager, Bill, if you're able to speak to that topic.
Sorry, Brian, could you say that again, please?
Are you able to give us a rundown of the financial needs for the town for the remainder of 2021 and talk about planning for 2022?
So this year, just last week, we had to spend, I don't know if this is what you're asking for, but we had to spend approximately $7,500 for new air and heat unit for the second floor of the building here. Our servers are kept upstairs, so it had to be done immediately. Is that what you're looking for, Brian?
More broadly speaking, so that the investment committee can have some sense for planning for allocation of investments. We'd like an overview of the budget for the town. How is the budget trending for 2021? And what are you anticipating for 2022? I think last time this committee met, the town was projecting that there would be some shortfall in 2021 due to COVID, but receipts were up from property transfer taxes in particular. And we're hopeful that you can give us some update where the town stands today and what you see for the future for next year.
Okay, so for 2022, transfer tax, we're at about $700,000 right now, maybe a little more than that. We projected $735,000 for the whole year. So we feel we'll make that goal. Parking, we are where we should be with parking coming in. If you need the exact number, Sheena can provide that. When I say parking, I'm talking about Park Mobile, selling our parking permits, the stats that are coming in on that. When it comes to building permits, I don't have the numbers in front of me, but the building permits are where they should be. We are right in line with what we projected for building permits. Sheena, am I missing anything else?
No, I would say that I did get the numbers for June's transfer tax, and we make budget for the year. In the first April, May, June, in the first couple months of the year, we have made transfer tax budget for the year, which I know it will slack off because this month was less than the prior months. Overall, our budget numbers are looking really strong. We're about, for the year, about 500,000 to the good over projected budget so far. So, and I don't think Elsa's going to do us major damage tonight. I think, as long as we don't have any major problems, I think we're going to look pretty good for this year. But we will have to really look at our spending for next year.
I think, Brian, we have to be careful, and Bill's brought this up before about relying heavily on the transfer tax. Eventually that's going to go away. And the other thing that we do have this year that we didn't have last year is the hotel lodging tax, which started July 1st. So the hotels in town all have the forms. It's something that they can fill out online, and they are due the 15th of every month. So we'll have to see how that progresses. But I believe, Gary, correct me, I believe we budgeted around $100,000 for income coming in off this year from that.
That just started on July 1st?
Started July 1st.
And we won't get it until August 15th.
Bill, do you want to mention the American Rescue Act money?
So yeah, thanks, Gary. So we, as a town, they went with our census of 400 people here year round. So based on that, they allotted us approximately $215,000. Out of that, we've received last week $107,000 of that. It's currently sitting in our account. And as we move forward, the plan on spending that money will be, it'll come in, for example, if we wanted to buy a new ATV for the beach patrol, that would come into me with justification. I would make sure it meets the requirements of the American Rescue Act. I would take that before the commissioners. The commissioners would look at it, say yes, no. We go ahead. If they said yes, we'd buy it. And then we would go into Project Gray Fox, which is done by the auditors committee. And then we'd go ahead and put the information in Gray Fox so there's transparency and accountability on how the money is being spent.
So for the three major buckets of income for the town, transfer tax, we've already made budget, building permits are on track.
Brian, I can't hear you.
Try that again. Can you hear me now?
Yeah.
Okay. So there are three major buckets of income for the town. Sounds like for transfer taxes, we've made budget already. For building permits, we're on track for the year, and the other one is parking. Sorry, I didn't catch what you said for parking. Are we on track with that as well?
Yeah, we are on track with parking.
Okay. So, and overall, we're $500,000, give or take, over budget to the positive side. So it sounds like we're in pretty good shape for this year. For next year, with probably a drop off in the transfer taxes, what do you anticipate? Is that going to put a lot of stress on the budget, or have you already accounted for that?
I haven't accounted for it. It probably will put a lot of stress on the budget. We're going to need to look at, $735,000 this year. We should probably go back and look at the last 5 years and maybe come up with the average and probably go much lower and maybe much lower than 700 or 680,000 for transfer tax next year.
You think 680 is more typical?
I'd have to look at the last 5 years and come up with an average. But eventually it's going to drop off and it could drop off significantly. So we just have to be prepared when that's going to happen.
Do you anticipate any need to draw from reserves to make up any hole in the budget for next year?
Not at this time.
Anyone else on our committee have questions for Bill?
Brian, can we maybe just ask that, Bill, if you'd be maybe interested the next time that we do meet to take a look at any projected things that might be coming up next year that we might be able to help anticipate for for planning to set monies aside. I guess I think that's sort of the gist of what we're getting at. We'd like to best be able to plan for whatever surprises might be popping up.
Yeah, I think to amplify Michael's point, I mean, it's a matter for us for planning for investment committee. It's a matter of figuring out where to allocate funds, whether we should put them in short term because they'll need to be drawn back to help fill the budget hole if there is one, or whether we can keep money parked for long term, which is slightly less liquid investments that will hopefully do a little better performance wise. So it's a little bit of a balancing act, I think. As we consult with Dominic, who's here from Brown, that's something that we want to be mindful of is if we think money is going to have to be drawn out of reserves or not. So it'd be helpful to hear from you, I think, in our next meeting, which would be in October, what you anticipate the needs for 2022 would be so that we can plan appropriately.
Brian?
Yes.
Bill and I have already discussed basically in his first week that as soon as season's over, we're going to start looking at the budget, looking at and getting a first very wide look at it and taking the worst case on the revenues and the most expensive case on the expenses so that we can get a jump on everything early and make sure all the departments weigh in, so that by October, we'll have a general idea. And then hopefully by the end of the year, we'll be able to have a definite idea of what we're looking at for next year.
Okay.
Brian, with Gary and Bill's help, we have this general fund, and then out of the general fund, there's going to be a capital improvement / investment. Certain percentage is going to go in there, and that's going to help us with our projected expenses that we look at, i.e. buying police cars every 2 years, buying other equipment every 2 or 3 years, air conditioning units like over at the lifeguard station. So once that fund starts setting up and we start having, getting the funds, money in that, we'll be able to draw from that also. Part of that's coming from the lodging tax, hotel tax.
Okay. Has that account been segregated in that manner already?
Not yet.
Is there a final plan for that? I think we're segueing a bit to item 7 on our agenda. There was a joint workshop among budget and finance, audit, and the investment committee, and this has been a long-running topic of how to divvy up different accounts for the town. Has any decision been made on that?
Correct me if I'm wrong, Gary, Bill, but the decision's been made on how it's going to be divvied up, correct?
It was. About a month, maybe 2 months ago, we met to assess a current draft general fund balance policy that we put together as a result of the joint meeting we had with the 3 committees, and then there was a follow-up meeting of just the committee chairs and Bill and a couple of the commissioners. From that, I put together, we had a range of opinion, I think, on how we should proceed with that. So based on that discussion, I put together some options and provided those both to Bill and to the auditors for consideration. Bill Zolper then had a conversation with the auditors, and out of that discussion, it seemed that we had maybe a path forward. And so I put together a draft that we then approved about 2 months ago. And it has a couple of different components. First, we would have an assigned rainy day fund balance equal to at least 6 months of operating expenditures. And the second part of it would be an unassigned fund balance equal to 15% or about 2 months of operating expenditures. I don't think that any of this has been implemented as yet, but at least we have kind of the roadmap forward for where we want to go. And then I think based on the current operating budget of about $3.7 million, that would give us a rainy day fund of about $1.9 million for FY 2022. And the idea behind that rainy day fund is to protect against, some major catastrophic events and, some longer term, longer impact kinds of events. The unassigned fund balance of about 2 months would really protect us against some of the short term things that we might face. And, I think the initial target for that unassigned balance would be about 600,000 K. The idea is that would still leave us some money left, which could go into the capital improvement fund, as Bill discussed. And the idea was that we would, with a rainy day fund of about $1.9 million, we'd keep the Brown advisory money in place, but there was an opportunity, I think, for the investment committee to think through a strategy, maybe a better strategy for how those funds might be invested. I think all of the Brown advisory money right now, I believe, is in cash or cash equivalents. And so there may be an opportunity to think through some of that, and maybe there's a better way to invest some of those funds. Again, considering what that rainy day fund is supposed to represent. I don't know, Bill, Stevens, anything to add on that?
No, I think you said it perfectly. The one question I had for Sheena, and I don't want to put you on the spot, is if you looked at the balance sheet right now, what do we currently have in cash and cash equivalents, inclusive of the 1.4 million that we have at Brown Advisory?
I'm not at the office.
Okay. Okay.
I'm sorry, or else I would have that number for you.
Okay. No, it's no big deal. No big deal. No, I think we're going to take a conservative, obviously we're taking a conservative approach. And I guess, Gary, from your perspective, what we put forth is from general fund policy, the auditors have accepted, and that we're going to move forward with that as a.
I do not know that the auditors have passed any judgment on that. I think
Okay.
they'll probably do that as part of the current audit that they're working on right now.
Okay, great. So Brian, maybe what is it from a commissioner's perspective and from a town perspective, we can have and this is, as Sheena pointed out, we can have a more solid approach to where use sources and use of funds for you guys to look at in terms of how to set up your long and short strategy to maximize the returns.
Exactly. So the two funds, rainy day is about 6 months, 1.9 million on a side. It's about 2 months or 600,000.
And here,
$2.5 million
Right.
to fill those buckets. Those are both short-term funds. We would need to be able to draw on those quickly. Is that the goal?
Correct.
Okay. Capital improvement.
Well, I would say the 15%, Gary, correct me if I'm wrong, the thought on the 15% is that would be in the bank account. We roughly would have 600,000 in a bank account to use for general operating. I don't know if we ever,
right.
yeah.
Oh,
But
so
the
that's
1.9 million could be at a Brown advisory short term.
okay, so is the 600,000 the unassigned account is actually an operating account, or that's
Correct.
the goal of it?
Gentlemen, I just pulled it up, and now this is not inaccurate because I haven't finished everything, but our total cash as far as checking and savings with all of our little accounts is 4.8 million. Our general fund has 2 million.
4.8 include beach?
That, no, not beach. I don't even
Okay.
look at that. That's the legal and litigation, the streets and infrastructure, all the self-committed and set aside funds. But our general fund balance right now is 2 million.
Okay.
And so the 600,000 would come out of that for the unassigned account, and any excess could go to capital improvements.
Does that general fund balance of 2 million include the Brown advisory money?
No, that is strictly if you wanted to go to Fulton Bank right now and write a check, you can write it for 2 million.
Okay, so you
Okay.
really, in terms of the unassigned fund balance, you really want to include that 1.9 million, or not 1.9, whatever the Brown advisory account is at the moment. Maybe it's 1.4 perhaps.
It's about one.
That's really part of the unassigned general fund balance.
So between the two,
I think we need,
3.4 million.
But I think what we're getting at is that, Gary, and you please correct me if I'm misreading this. We generally should have about 600,000 in Fulton Bank to cover ongoing operations, and then have the balance of in Brown Advisory to get some level of short-term gains. So if we need it from a rainy day fund, we can transfer it back in, but where we're able to get 2 or 3% return, et cetera.
yeah, I think that's the general idea. There are probably
Correct.
some wrinkles that go along with that, but I think that's the general idea.
Okay, so we've got roughly 3.4 million, of which we want to allocate 600,000 to the operating account, essentially a cash or demand deposit account. And the excess can all go to Brown Advisory to be invested, at least on a short-term basis, to hopefully get a few basis points or better.
Correct.
Okay, and then the total cash, the 4.8 million, Sheena, is that's independent of the 3.4 million we just discussed?
That's including the 3.4, but that's our streets and infrastructure account. That's our legal and litigation, all the little tiny accounts.
Okay. So how does that relate to the rainy day fund, if at all?
The 3.4 between the Brown Advisory and the general fund bank, the main bank account, is what you have to play with. Everything else is previously allocated.
It's already assigned.
Right, by the commissioners.
Okay, so we can't touch the 4.8, or I'm sorry, it's 4.8 minus the 3.4.
3.4 is what you have to play with.
Okay, so the other 1.4 is fully assigned. We can't touch that.
Correct, sir.
All right, so of the 3.4, we need to put 600,000, or that's the plan. 600,000 would go to an unassigned operating account, essentially a cash account. And then the balance that's left over, which would be roughly 2.8 million, can all go to Brown Advisory and can be invested. Do I have all that right?
Correct.
And if we're taking the fund balance policy in place, out of that assuming Brian, all those numbers are correct, out of the 2.8, 1.9 would be in short term, and 900 would be in long term, would be long. So that we would have the sufficiency of having 6 months available to us.
Okay.
Hey, Brian,
okay.
just jumping in. Yeah, from the Brown Advisory side, just kind of listening in, thinking through logistics from our side. I mean, it sounds as if though we would need kind of another account at Brown to distinguish between what we currently have in the short-term fund and what is now the rainy day fund. The rainy day fund would remain short-term, and then what we have left over that is currently in the short-term general fund would then be able to be invested with a longer-term focus. Do I have that right?
Yeah, I'm getting a little confused and a little uneasy about some of the numbers, because I don't think we have a complete picture here. But if we were talking about the rainy day fund, the initial balance was really based on the operating expenditure. So we're talking about 6 months. Half of our current operating budget would be about $1.9 million. So that would be the rainy day fund. There would be the short term, or rather the unassigned fund balance would be $600,000. And then whatever balance is left would go into the capital improvement account. So that would be, how we would divide up. If in fact the total number is 3.4, and I think there are probably some other restrictions on some of that. I think the LESO money from the auction of the military equipment, I think that money is.
The LESO is in that LESO is already self-allocated out of it.
So would we just say that the current money, the 1.4 that's at Brown Advisory is just going to be long-term focused, and everything that's currently at Fulton Bank is going to be allocated to the rainy day fund? And that's basically how it's broken out currently, if I'm hearing you correctly. We have 1.4 million in the short-term fund at Brown, and you have 2 million at Fulton Bank. And of that 2 million, you're just going to allocate that 2 million into two separate accounts.
Again, I'm not sure exactly operationally how this thing is going to play out, but I was thinking that the short-term Brown Advisory account would be the major portion of the $1.9 million rainy day fund. That's the first thing. And again, by making that part of a rainy day fund, an assigned rainy day fund, that's intended to protect against catastrophic events. Things that have a longer term impact. The idea was that would then give the investment committee the opportunity to think about better ways of investing that current investment of $1.4 million. There could also be recommendations to put some more money in that. There is 5% of the transfer taxes each month that goes into the Brown Advisory account. That's going to continue. So there's some opportunity for growth there. But again, I'm just a little uneasy because I don't feel like we have a complete picture right now.
I'd like to just point out that I think we're just getting confused with two different elements. One is the cash or investment policy, and the second is the fund accounting. Okay, so from a fund accounting, we have restricted or assigned funds associated with capital improvements, associated with as we're saying, rainy day funds. It's a little different. I look at things, Gary, and this is where maybe we need to come together from a commissioner's perspective. Is there being a general operating account? There's general operating, which would have 600,000. There's a short-term operating, which would have the 1.9 million. And this is at Fulton. This is at Brown Advisory. And then we have a long-term operating at Brown Advisory, and then we have the beach. So theoretically, there'd be 4 accounts, bank accounts, but we'd have different fund balances based upon how they've been restricted or assigned or unassigned.
Yeah, that's something we can talk about. I don't think that's a part of the current fund balance policy that we adopted yet, but again, it's not cast in stone. I don't think we want to change it too frequently, but it's something to talk about.
Okay.
Let me ask a question about the transfer taxes. Gary, you said that some of it already goes into the Brown funds. I thought that was going into the operating accounts for now.
It does. Most of it does. 95% of it does, but 5% goes into the Brown Advisory account.
And how do we decide that only 5% goes in there?
It was a carryover. We did some reorganization of some of the set-aside accounts, some of the money that we put aside for streets and infrastructure and some other uses. And I forget exactly what previous account that money was set aside for, but we eliminated that account and decided to make that contribution to the Brown Advisory account each month.
Okay.
And I can get you the background on that. I just
No, that's
recall
okay. I just didn't know how you decide on what percentage goes to Brown. So that basically is decided by the commissioners. Is that what happens? That particular decision is made by the commissioners. That's right. Right. Okay.
And that the commissioners will decide at some point that if there's something that's needed for the street improvements, that's where that money will need to be tapped from.
Correct.
Correct.
Okay.
Yes.
All right. Thank you.
All right, so recognizing that, I think as Commissioner Persinger has pointed out, these numbers are not set in stone. This is a little bit of guesswork, but if I understand this correctly, the idea is there's a 2-month operating balance that would be held at Fulton Bank of roughly 600,000. Then everything that is left over from that $3.4 million pot, so there would be another $2.8 million, can go over to Brown. 1.4 of that is actually already at Brown. $1.9 million is considered the rainy day fund, so that needs to be allocated short term. And everything else could be allocated long term for purposes of capital improvements.
I agree with that. Yeah.
Okay. So I think the net of it is that we'll have about 2.4 million sitting at Brown based on current, guesswork of the dollars. 1.9 of that is short term and 500,000 of it moves to long term. Sound right to everyone? And then separately, there is a beach account that is also long-term dollars.
I'd love to see it all on paper, but
Yeah.
it seems to make sense to me as you stated it, but I'd still love to see it on paper.
Is there a better word for it than calling it a rainy day fund? I mean, it's just.
It seemed to be a well-accepted term by the accountants, and I think we
Okay,
actually had a rainy day account some time ago and got rid of it, and then we've gone back to it again after not a recommendation by the accountants, but certainly some strong indications that it seemed to be an acceptable way to go.
okay, all right.
So I think for purposes of our committee and making any final recommendations for allocation of funds among accounts and investment style for Brown Advisory, we would just need to know that the accounts have been set up as we've discussed, or in whatever other manner the commission decides. And once we have the final word on that, we can move forward with Dominic and Brown Advisory to give him final direction. But I think at least the outline we've sketched is essentially some money is going to move out of Fulton and come on over to Brown Advisory to be invested, bulk of it short term, but roughly 500,000 of it is still looking long term.
Mm-hmm.
All right, any other questions or comments from our committee on this topic? All right, then why don't we segue over to Dominic, if you don't mind giving us an update
Sure.
on the portfolio.
Yeah, absolutely. Thank you. And that's helpful. And I think as it relates to the accounts, we can, we certainly talk offline if we want to kind of segregate those dollars in different accounts for accounting purposes. It should be pretty easy. And this still can be considered general fund. We can still kind of title it as general fund dollars. And if so, that account setup is quite simple. So we can do that.
Yeah, I mean, if I understood Commissioner Stevens' point, I mean, there is an accounting issue for how these numbers get recorded on the books from an accounting perspective, but how it's recorded in the investment accounts at Brown could be something different.
Okay.
In other words, we don't need multiple short-term accounts at Brown Advisory.
Right.
The accounting gets taken care of at the town level.
Okay. So then I think we just keep it in. I mean, if it's kind of put it out there to the team here, it seems to me that we would just kind of keep that one portion of the assets in short-term investments, and we can kind of keep it all in one general fund, and have the remaining portion and use that as kind of our asset allocation guideline to say that we would keep the 1.9 million in short-term investments and just keep it in one account, if that was okay with everyone. Just for simplicity in managing the assets.
I think that makes the most sense. Does anybody have a different view? Okay, it doesn't sound like there's any objection to that, so I think that's how we would proceed.
Yeah, Brian, I would just ask that we think about kind of an investment policy statement for that account, or revising the investment policy for the general fund to account for this kind of a new allocation, just so it's clear from our perspective, and it's clear for, any new members kind of coming onto the committee, and we have, very clear guidelines as to how to invest those dollars.
Agreed. I think once we get final direction from the town on the split of these different accounts, the rainy day fund, the operating account, capital improvements. Once we have that final direction, we can update the investment policy to track it accordingly.
Okay, great. All right, moving on. I'm going to share. Did everyone receive a copy of the book?
Mhm.
I'll share a screen anyway, but just want to make sure you all have your own copies. And let me know if this is too small. I can make it a bit bigger. Okay, so just a kind of a pretty general update here, and nothing. I'm not going to steer away from anything that we've kind of talked about in the past, and really happy to cover anything along the lines of the portfolio that you would like to cover. I think overall, kind of year to date, first half of the year has been quite positive. So the portfolio overall net of fees is up 13.1%, and I'm really only presenting on the long portion because the short term and the general fund are in cash and cash equivalents. So I don't think we need to cover anything there. So I'll just cover where the bulk of the assets are, which is in the long fund here. So net of fees, the portfolio is up 13.1% relative to our blended benchmark, which was up 9.2. We certainly did this through both allocation, so being kind of fundamentally underweight fixed income, and through manager selection. As you can see on the right hand side, we have a 72% target. We are underweight, kind of significantly, and that's really from an asset allocation standpoint, as as rates kind of continued to fall kind of last year, our bond managers were doing a really good job, but as the pandemic started to kind of take a turn for the better, and we saw kind of the light at the end of the tunnel, we certainly added, and we're adding to equities, just not wanting to really have a fundamental kind of overweight to bonds or really outweight fixed income here, as rates started to tick up, as really that's impairing the overall kind of price of the bonds. And so we will remain kind of underweight as we, although we have seen kind of the 10-year kind of come back down into the 120 range, 130 range over the last few days. We still think, overall, we really want to kind of stay underweight to our kind of long-term targets, as we see just more value in the equity markets, kind of going forward, and really just not a lot of upside in fixed income. Overall, in the fixed income portion of the portfolio remain kind of high quality, corporate, high quality kind of corporate credit, and still kind of really like the kind of overall performance of the bond portfolio. As you can see kind of on the bottom part of this page, if you look kind of at inception to date, overall this portfolio is up about $1.5 million since we started investing. And for a 75-25 portfolio, that's I would say it's quite good over that time frame. And overall, kind of inception to date, the portfolio has compounded at 5.1% annualized. If we kind of look and kind of go through, the managers, as we always do, managers continue to do well. On the bond side, we continue to kind of keep pace with the Barclays Ag, and that's all after fee, which the fees on that are very, very minimal. The Brown Advisory kind of flexible equity strategy, has annualized at 1.7% better than the S&P 500. So you kind of take your eyes here to the 16.7 relative to the S&P, which is up 15% annualized over that same time frame since 2015. So continue to like what they are doing. Manish, who runs that strategy, talk to him quite often. And he's, he has that Warren Buffett style of management, right? Have a few eggs, watch them really closely. Look for kind of compounders that are going to continue to kind of put off good cash flow. And that's what he's been able to do. And he's done a tremendous job with his strategy. And, we kind of like let our runners run. And so, we don't see any need right now to be kind of trimming this position. If we see some risks in the market, we may trim that back a little bit more closer to target. But right now they've been producing some tremendous returns, and so we're going to kind of stick with them. On the small cap side, small cap fundamental value, the last time we talked, I think we talked about adding, a growth manager in the portfolio. We really just decided not to do it. I think, value has outperformed kind of growth in the U.S. markets, both in the large and small cap side, over the last really 8 months. In a way it hasn't done in really 10 years. And so, we were fine kind of holding on to the small cap fundamental value fund. And you can see, 23.5% just year to date. It has underperformed the benchmark. And really, and if you think about kind of all of the meme stocks out there, the AMCs and the GameStops, all of that is kind of in that Russell 2000 value index. And so it's been a really difficult index to beat on the upside, as really anything from penny stocks to really cash negative companies were really the biggest kind of winners. Our manager, David Schuster, who manages this fund, Mike Pogge, who manages it with him, they're just not going to invest in those types of names. They really have a quality bias. They're looking for dislocations in the small cap value space that are cash flow generating and, are really long-term type of investments. Over the long term, they've outperformed, and they're going to go through periods of underperformance, as a lot of active managers do. But still feel good about them. It's something that I'm certainly looking at and keeping a close eye on. But I would like to think about maybe adding a small cap growth manager into the portfolio to kind of balance out that the investment we have there. And so kind of more to come there. I can certainly share some additional thoughts, but would like to add a small cap growth manager. On the global side, the global leaders continue to do well, continue to kind of like the direction of this team. And as I've said to this group in the past, I mean, probably the most disciplined group of investors I've ever met, just from a process perspective, from a psychological perspective, and analyzing every trade and every asset allocation decision they make. Our teams at Brown have started to use kind of outside firms to really evaluate our decision making and try to take a lot of the guesswork out of it and really make sure we're making sound investment decisions that are actually paying off. On the emerging market side, if you recall, we added this. We had taken emerging markets out of the portfolio for a period of time, and we got back in 2019. And as you can see, it's been a good choice since that period of time, up 19.7% relative to 18% for the benchmark. Continue to kind of like this. This is a commingled vehicle, so it's a mutual fund that Brown Advisory set up. But the investments inside of that vehicle are Wellington Asia, which is a group out of the Wellington kind of conglomerate, if you will, investment firm, and 40% is Pzena emerging market value. And so we kind of balance our Asia exposure between those two managers. And so value has performed quite well and has been kind of one of the bigger reasons why the fund is outperforming. And so continue to like the space. I think overall, I really like kind of the concentration in this portfolio. We don't have any type of kind of what we'd call diversification. All of these are concentrated equity portfolios where we have really close relationships with the management teams. we're a phone call away from any of them, and they've continued to perform well kind of through the pandemic, and really, I would say in some points really increase the quality of their where they could buy stocks at a discount, and that has really paid off handsomely. So that's the portfolio so far. So the holdings. So you know that the flexible equity strategy is a separately managed account, so owning kind of individual equities, and so those equities are listed here, so you can kind of see what you actually own. So you can see not a large portfolio, and then we have the short-term stuff here. So I'm gonna stop there real quick, and I could talk kind of bigger picture stuff as well. But any questions about portfolio positioning, performance, asset allocation?
Yeah, this is Bernie. I have one. In any of the emerging markets, does that include any of the Chinese firms?
Yeah, no, absolutely, and it's something we are watching very closely. As you're certainly seeing in the news, Xi Jinping is certainly flexing his muscle amongst Chinese companies. I think overall it's quite a diversified portfolio, and it's not exclusively China. The Asia exposure is across Asia, not just solely China, and so I think that's something that kind of gives us some comfort. But yeah, there are some Chinese companies in that portfolio.
Dominic, I have a question.
Of course, go ahead.
If you go back to page 3.
Sure.
And I look at where the income down below is showing $19,584 for year to date.
So far this year. That's year to date, correct.
And that equates to me, and I'm just looking at these for a few times. Up top, it's a 2.4% performance.
4.7%. 4.7.
4.7%.
Yeah.
But when I look at the portfolio beginning value and I multiply that by 4.7%, I get a much larger number than 19,000. That's what I don't understand.
Yeah. So income is really only the income off of the bond portfolio. So the yield generated plus any dividends paid from the equity portfolio. So that would be your income bucket. Now, if you look at market gain, right? So the amount of appreciation in the portfoldio this year is at 230,000. And so you would take the income plus the market value.
Got it. Okay.
And that
Thank you.
gets you that 4.7. Sure, no problem.
How do you, obviously the fixed income and the bonds market over the last years has been struggling with low interest rates. Have you seen other municipalities change or alter their investment policy to have less on cash and equivalents and fixed incomes and more on the equities as a result of that? The Feds.
Yeah, look, you know this, right? Every municipality is completely different, right? It's really difficult to compare one to the other, and I think we'd all agree that Dewey is kind of its own place, right? In a good way, and so it's really up to. We are strategically underweight, right? 63.2% relative to our long-term target. So, we're managing kind of the risk within the bond portfolio, but from a portfolio management perspective, we are, that's what we're getting paid for, right? We're getting paid to make those kind of changes on the margin to help provide kind of additional growth in the portfolio where we can, at times where we can. And so, unless you say, yep, we want to risk up, I wouldn't necessarily recommend doing that right now. There's some other things that we can, think about, adding real estate into here, adding, other asset classes into the portfolio. But we're in a difficult environment, right? We have $5 trillion that has been printed over the last 18 months, we're in, low interest rate environment with cheap money, job market where most companies are, and we all hear it every day, right, are struggling to find workers. You're in an equity market that is, it's being held up because of all the liquidity in the system. And we'll find out as companies start reporting for Q2. But, I think overall, I really don't think, unless this is money you absolutely don't think you're going to need for a really, really long time. And it's really, truly long-term focus. But I've never really, that's up to the committee and to the commissioners to say, yep, we want to be a little bit more risky. I don't know if this is the right time to be that much more risky. I just, this market continues to heat up, and it could, right? I mean, we can be like in this environment for another kind of ticking higher for the next couple of years. But I think that the portfolio is humming along quite nicely, kind of where it is, and we can kind of make some small changes on the margin. But I'd hate to make any kind of tectonic plate shifts in this current environment.
Yeah, I guess I'm just concerned. I think, when I look at it, there's nothing that anybody's done positive or negative, but when I look at our 72 to 28 or 72.3 and then the 25 in terms of the equities, I think a lot of that decision was made when you can get 6 to 8% on the fixed incomes, and now we're at sub 1. It's just, we're just not generating a lot of money on $5.5 million, and it seems like there's a little bit of an opportunity lost. But I think it's a conversation for Gary and I and the rest of the commissioners to dig in a little bit deeper in terms of what is our how risky do we really want to make this, or take a look at it? Because
yeah, I'm sorry.
No, go ahead.
No, I just think it. I mean, I think it is, right. I mean, I think we oftentimes talk to clients about what do you need? What is your kind of, and we always kind of think about, certainly when working with private clients, we kind of think of it kind of as a 3-bucket, approach, right? You have kind of your liquidity bucket or your operating bucket, which is, what do you need, and if you think about kind of some just fundamental kind of asset allocation, that liquidity bucket is what's your spend rate, and let's take, say, 3 to 4 years, and let's have that in kind of your liquidity bucket, right? And so, over time, anytime we've had kind of a recession, between 3 and 4 years, the market is kind of back where it was before it declined. And so you have that as kind of your liquidity bucket. So you're not selling equities when the equity market's down. And then you have your kind of your core, which is, all right, this is kind of your core equity exposure that is really focused on long-term capital appreciation. And then you have kind of an opportunistic bucket, which is dislocations in the market. It could be, investing in private, it could be invested in real estate, it could be just opportunistic dislocations that we see in the market. And so we think about kind of asset allocation in that framework. And it's a lot of what you all are doing right now, right? You're thinking about what is your rainy day fund? What is that multiple of, your budget? And let's make sure we have that money set aside. This is kind of core. Let's make sure this is growing longer term. So maybe we do get a little bit more aggressive with this portion of the assets. And then, if we see opportunities in the market, we take some of this and put it into that opportunistic bucket. But it's no different than how we would work with kind of a regular kind of private client, non-institutional type of relationship. And so, I'm happy to kind of dive in deeper there, but that's, I think, fundamentally how you were thinking about it is how we would think about it as well. I don't know if that's helpful or not.
Dominic, I have some both observations and questions.
Sure.
Stevenson, I think
Brian, you keep going in and out for some reason. Not sure why.
Can you hear me now?
Am I the only one hearing that?
No, I'm hearing it too.
Me as well. Yeah, Brian, we still can't hear you.
Talking and it's not on mute.
Yeah,
let me
now
just-
you're back.
There you go.
Oh, all right. Not doing anything different, but we'll try again. So some both questions and observations. And observation wise, I think in response to Commissioner Stevens' question, I think taking some of the money out of short term and moving it to long term can help boost performance. Now you're looking at performance within the long term account. We've talked about this last time, and I think we'll obviously be looking for guidance from the commissioners. I think Dominic has already sort of tweaked some of the allocation to take the portfolio from what would otherwise be about 75% fixed income. Dominic, do I have that right?
Yep.
And you've ratcheted it down and allocated more toward equities than the model would otherwise prescribe. And you can see that we've gotten a bit better performance. Trailing 12 months net performance is 13.1 versus the benchmark of only 9.2. So, I think Dominic has done his job of getting that extra return for us. And really, it just comes down to, at this point, does the town want to take on more risk? We could change the allocation altogether, but that obviously threatens the principal that's sitting in that long-term account. It's risk reward. To the extent that we have a surplus in there, I would personally recommend that we up the risk a little bit, because we will have so much set aside in a short-term account. And the goal of setting up those accounts, the allocation, short-term versus long-term, is precisely to make sure that you've preserved enough for a rainy day and that you have enough in operations. After that, you presume that you don't need to dip into the long-term fund because you've already set aside a short-term rainy day fund. So I think from a portfolio construction standpoint, we could ratchet up the risk a little bit on this. I don't think dramatically so. I don't, at the end of the day, it's a municipality. But I think to your point, Bill, we probably could get a little bit more performance just by making a slightly different allocation. So that's one observation. The other is, I think I raised this last time, Dominic. There is cash in the long-term account, and it's not a huge amount, but I wonder, should we just move the cash allocation and put it into one of the other buckets that has better performance, given that side by side with this long-term account is already a short-term account that is cash focused?
Yeah, no, I think it's fair. It's a fair point. We kind of use it as kind of, strategic cash, and if we see kind of an opportunity to put it to work, we will. And that's really why we have it. We try to keep it, pretty minimal. But what we do, when fees come out and things like that, we want to make sure we have a little bit of cash on hand. It doesn't probably need to be that high. It doesn't probably need to be 73,000, but we can certainly put some more of that to work kind of across the portfolio. And I think to your point, Brian, if we were to make some changes, I don't think I would, like you said, you are a municipality and you really want to protect principal. But I think going to kind of a 60-40, 60% bond, 40% equity, I think would be about probably the right. And we are doing that kind of I would say half of our clients are thinking that way, where we are just given the outlook on the bond market, reducing our bond allocation. And to your point, I have done that already, but I think we could go a little bit more. But again, that would just need to be in the policy, and I'll follow that policy.
Okay.
So don't we have a policy in place that defines, what the ranges ought to be for all of this?
Mm-hmm.
We do, although it's not consonant.
I can't hear you.
We do have that, but it's not consonant with the plan to move to these allocated accounts. So I think we need to revise the investment policy so that Dominic has clear instructions of what the parameters are.
Yeah, I think we just need to review it, Jimmy. I think this needs to be kind of reviewed and you know, happy to kind of take that offline and just kind of do more of a comprehensive review with whoever would like to. And, you know, if we want to put something together and put it to a vote, I'm assuming the commissioners would need to vote on that change. Is that the process? Okay.
Yep.
So if you want to put that up to a vote, we could to make a change, Brian, and then we can work together on that offline and submit that to the commissioners if everyone's in favor of it.
A vote to revise the policy, but not to actually make the revisions yet. I mean, I think we have already plans to do that. The holdup is really the determination of what the account allocations will look like. That's the direction we're looking for from the town. Once we have that, we can go to work on the policy, and then we'll have a revised policy to put up for a vote.
Okay.
And it sounds like we're getting
Do we want-
pretty close on the direction from the town. And if I understood Commissioner Persinger correctly, it sounds like it's been drafted, it's been put in front of the auditors, but perhaps the auditors haven't approved it yet. One other question I had, which I think is for the group, is do we need a separate beach replenishment account long-term, or can the capital improvements long-term be blended with the beach replenishment account?
We can't do that under the current code, no.
We cannot, so we have to maintain a separate, so we'll need a second long-term account side by side with the beach replenishment account.
I believe that's correct under the current code, that's right.
Okay.
Gary, we may want to look at, again, it's an account versus the fund balance issue. As I reviewed the code, I didn't see where we need to have a separate account, but you and I can take it offline and come to an agreement on that, and also talk to the other commissioners about it.
Separate from the beach fund?
Well, one's fund accounting. The fund accounting. Yes, the beach fund needs to be separate than all the other elements of money that we receive. But in terms of blending our investments, it doesn't necessarily have to be in a different account. As I read the code, but I could be completely wrong.
Yeah, and I think that's the direction we'd like to go, to have fewer accounts, certainly, and to handle those divisions within the accounting system rather than having separate accounts.
Correct. Like in a perfect world, we have our Brown advisory money is short and long. And that's two accounts that we have that are up to.
Right.
Okay.
Yeah.
Okay.
Yeah, I mean, I would just say, I mean,
Go ahead.
I would say to the earlier point that I was making was just that, you know, thinking about short term, you know, we can do that in one account and manage it in one account if that's, you know, feasible. And just, you know, that, but you all tell me and I'll follow your direction. It's, you know, it doesn't matter to me. I just think if we are going to keep that short-term account, we just have to think about, you know, really the direction there was kind of using treasuries, treasury bills as a kind of a proxy or an investment, and you know, we all know where they are today. And so, you know, thinking about amending the policy to allow for a, you know, fund, i.e. a short duration, short-term, cheap Vanguard fund, to be a cash substitute, to be earning a bit more income in that account. It seems to be, you know, things are just changing, right? The landscape is changing from when those policies were originally written. And so I think you just need to think about what is the right investment vehicle to be managing that cash.
Yeah, Dominic, I think there's I apologize for Brian jump in, but may I ask a question?
Yeah,
if you go to page 13, right here we've got $1,135,000 sitting in the general fund short.
Right.
And if you looked at the change in portfolio below, since inception, we've only If you can roll, I can't see the whole thing.
Sorry, yeah, I'm with you. Oh, jeez. I'm sorry, guys. 1 second.
I mean, we've got 1.3 million, and our market gain loss. We've lost $8,000 since inception in 2015. When I think year to date, we've made $174. It seems a waste of assets in terms of a true return of what we can add. Even the trailing 12, only $429 on 1 million or on $1,099,000 in the beginning with 245,000 in the contribution. So I think there needs to be a look at the strategy and how to get a true return that's going to be meaningful for us long term as a town.
Yeah, right. And I think this money is the money that's been talked about to be put into a more longer term strategy. And if you'd like me to come back with kind of with a proposal for a longer term strategy, I'm happy to do that. I think that right now we're restricted to what the investment policy statement says. And as kind of the 0 to 3 month, market, 0 to 6 month market, looks like in treasuries, it's yielding nothing. And so it's just really hard, but that's what the policy kind of says to invest in. And so we just want to, we're probably gonna have to make some amendments to the policy to allow for, some different, investment vehicles. And if that's the case, I mean, we can certainly beat that. We just have to kind of make those amendments to the policy to give us the leverage to be able to make those changes.
Yeah, I think there are two issues at work with this short-term portfolio. I mean, one is the allocation of accounts. We are looking at having a rainy day fund of 1.9 million. That's got to come out of all the money that gets thrown at Brown Advisory. So 1.9 million, and there's only less than 1.4 sitting there right now. It has to go to short term. The other side of this equation is what is the particular strategy for short term? So I don't think we can change it from short to long, but we can have a different short term policy, one that is not exclusively focused on treasuries.
Right. And I think that's right.
I think we can.
Well, I don't know. Are these even in treasuries, or are these just sitting in cash? Are they in cash equivalent?
It's a money market. Yeah, I mean, it's a money market. It's earning about the same as treasuries. They're earning it very little that a 3 month treasury would be earning. I mean, 3 6-month treasuries are basically zero, right? So it's same as the money market. I mean, it might be a basis point or two off, but I mean, we're talking about pennies at that point. So yeah, I mean, I think let's, if we can kind of, if you can help me out thinking about the general fund, because this is general fund, not beach replenishment. Think about what that goal is, and then defining it when we can talk about what you want to do, and then we can write that into the investment policy statement from a short-term perspective. And then, could maybe be, in investments with a duration under 1, or it could be, what kind of instruments can we invest in? We can boost yield, but, but we can do it through, other types of kind of fixed income instruments or credit instruments. And so it's just right now, I mean, it's just really difficult to make any money in the treasury, in the short end of the treasury curve. So defining that, and then, yeah, we'll follow it. It's just,
yeah, I mean, there are two variables that we
handcuffed
can
to
look at, Bill. I mean, one is the duration. Treasuries are going to be very, very short. So Dominic, as you just pointed out, I mean, we could make it a 1-year duration for the bonds, which gives you a little bit more flexibility, and that's consistent with a short-term focused account. The other is credit quality. Credit quality, you're not going to improve on treasuries. And if the goal is to preserve principal, you've got to keep the credit quality high. But, there's still room between treasuries and, junk. There's a lot of investment grade in between that,
Agreed.
in my view, would meet the purposes of the account, it adds a measure of risk, but not tremendous risk.
Right.
So I think we can absolutely fine tune it to hopefully get a little bit of performance out of this that we're not seeing right now in treasuries.
Yeah, I'm happy to work with you on that, Brian. I mean,
Okay.
it could be a year, it could even be a year and a half. I mean, right? I mean, it doesn't have to. I mean, it's as long as you keep it kind of under 2 years, I think you're pretty safe. You know, but if you want to do a year, that's fine too. I mean, but I agree. I mean, that was kind of one of the points I wanted to make today. Is I mean, I don't like seeing this sitting in cash. You know, I mean, from my perspective, I want to see it earning something. I don't want to see it sitting here. But you know, let's make those changes, and we'll make changes on the investment side.
Yeah.
Any other questions or comments?
No, just, you know, looking forward to be able to, you know, clarify this as long as the commissioners are okay with, you know, allocating this 1.9 to be liquid, but understanding that, you know, we might, you know, like you say, there might be a little bit more risk there, but there's a lot of opportunity to get some higher returns.
Brian,
Yes.
I think what I should do is probably send you a copy of the policy, the general fund balance policy that we approved, and hopefully that the auditors will agree with. You might get some different, you know, indications from that perhaps. I mean, I don't think we were, at least I wasn't, when I wrote it, thinking of the rainy day fund balance of $1.9 million necessarily all invested as a short-term strategy. You know, it doesn't have to be, you know, all of that money doesn't have to be invested in using one strategy. That can be divided up into some subcomponents there, some of which is a bit longer term.
Okay.
That's something for you guys to kick around. That was the notion. And when I drafted this thing, that you guys would have a little more flexibility thinking through how some of that money could be invested.
Okay, that's helpful. Yeah.
Yeah, Gary, I agree with you because I looked at 1.9 being how do we get access to the money? And it could be in a long-term fund that's yielding, you know, S&P quality returns, for example. But it's just, you know, putting it in real estate is not going to give us the liquidity we need in times of shortfall.
Right.
So I agree with you. So Brian, yeah, take a look and come back to us with if you have any questions.
Yeah, I mean, I think fundamentally, you know, liquidity is not going to be the issue because Dominic can put us into any liquid investment. I mean, you could have real estate that's highly liquid if it's a real estate fund. To me, it's a question of how much risk does the town really want to take on?
Agreed.
But we'll take a look and we'll make a recommendation. Any other questions or comments from the committee? All right, I think that's it for Dominic. Very much appreciate your time on that. You know, I, for one, my opinion, the performance looks pretty good. You've outperformed your benchmark, and that's greatly appreciated. Obviously, your hands are a bit tied by what we've allowed you to invest in, but working with what you've got, you've done a very nice job for us.
Well, it's been a pleasure.
Are we not going to address your suggestion about using that Vanguard fund at this point in time for the short-term rainy day fund? Is that, we're going to wait then, I guess?
You tell me. I mean, it can happen quite quickly. I mean, it can be invested tomorrow, but that's up to the committee.
And it's permitted under the current investment policy, Dominic?
That's kind of why I wanted to bring it to his attention. I don't know. I guess there was more to be discussed than I had thought, and I don't think funds are. I think it was direct. I mean, I'll take another look. Under the current policy, I don't know that it is. But let me do a double check there. I think I have the most recent investment policy statement. But Brian, if you have it handy, if you could shoot it over to me, I could take a look. I mean, it's his short duration, and I can pull it up real quick. I mean, I have the fact sheet right here.
Because I recall that, we had this discussion last time. I don't remember when we met. It must have been this spring or winter. And I know there was a dialogue related to doing something like that to earn more money on basically short-term funds that was earning us nothing. And so, I just don't want to like wait for another 6 months before we make a decision and stuff like this.
Yeah, I mean, I tend to agree, and it's kind of really why I wanted to bring it up again.
Wait, what did it go back? What did it just say about the credit rating? Go back down. So the credit rating was AAA.
Yeah, I mean, it's all investment grade.
So then I think it would fit within our investment policy that's set within the code.
Yeah, I mean, it's
So I don't think we can go
57%
below A.
treasury. Okay, well, you have 13% in BAA. So.
But combined,
Oh yeah, combined, you're
would be
definitely
fine because it's an index fund. So
Okay.
I don't think it would not violate the code as I've read it.
Yeah, I mean, these Vanguard funds, I mean, I'm on the board of, 4 other HOAs that we basically invest a lot of these, our reserves in the Vanguard funds, and they're very safe, and they, earn us a few points, rather than having it sit there earning nothing.
Yeah.
So I'm looking at the end of the PDF. Dominic. I just sent you the link, Dominic. So for general fund beach replenishment short term, allowable assets are fixed income, U.S. Treasury and agency obligations only, cash and cash equivalents, which is short term, highly marketable securities, readily convertible to cash, basically Treasury bills.
Right. That's historically what we've used, 3 and 6 month
Yeah,
treasury
so
bills.
I think that's the problem right there. It restricts it to exactly what he's in.
And so I think that's why I wanted to bring it to this group, because I couldn't just pull the trigger. If I could, I would have. But I agree with you, Jimmy. I don't really. I think we need to have some urgency around this to at least to make that small change and put it to the commissioner's vote, rather quickly. I don't think that's a big change. At least to kind of get us. I mean, I don't know, Brian. What are your thoughts?
That's fine by me. I mean, I think we could vote now to change the short-term policy to allow for investment grade bond funds. And then we could, if the vote is positive, we could circulate an updated policy that makes only that change and put that before the commissioners. Pretty straightforward.
Yeah, I agree with doing that.
I second.
Okay. Do we want any discussion on this, or do we want to move for a motion?
I think we've been discussing it. So
I'm sorry, Michael?
I think we've been discussing it, so I'll put forward the motion.
Yeah, and I second it.
Okay, so the motion is to amend the investment policy for the general fund and beach replenishment fund, which is the short-term component, and add to the list of allowable assets, which we would include to be investment grade fixed income funds.
Mhm.
And do we want any further parameters on that?
Brian, what do you
anything else that you would recommend?
I just have a question for you what I'm looking at our code right now, it says fixed income, U.S. Treasury and agency obligations, including agency-backed mortgages, backed securities, and commercial mortgage-backed securities, corporate bond and corporate funds, collateralized debt obligations. Or so isn't that what the Vanguard or corporate bond and bond fund technically?
No.
Okay.
Well,
That's my view, right? I mean, it really isn't. It's a index.
Okay. I thought it was a bond fund.
It's indexed off of short-term bonds, but Vanguard, in the index is a lot of different factors, right? Like I know like some of our reserves are under Vanguard dividend, index, or so there's all kinds of different kinds, right, Dominic?
There's many different ones. I think Bill, what you had read and Brian had read were two different things. Did I hear that right? I'm wondering if
that's what I was just going to say.
short-term?
The investment policy itself, I think, is not tracking what the code says, which I think is what Bill is reading.
And I'm reading the code.
Okay, but we changed the code. The code has been changed, and you may not be reading the most current version of the code. We made a very general investment policy statement in the code, and then deferred to we're now calling the implementation plan, which is the meat of the investment policy. And that's what the investment committee should be looking at, considering revising. Now, I honestly do not remember how much difference there was between the old code and the new statement of the implementation plan. I don't think we changed a lot of details in there, but there still could be some differences. But in any case, don't look at that old code. That's not current.
Yeah, I'm reading from the investment policy, which is what's posted on the town's website.
Yeah, and there were very few changes to that, and that hopefully is the most recent version that Brian is looking at.
Yeah, it says it's from December of 2015.
I don't think that's current.
It may not be current, but again, I don't know that there were significant changes. I mean, our main purpose was to make sure that we didn't have any conflict between the code and the investment policy. And that's why we made the investment policy in the code very general, deferring to the implementation plan and to the investment committee and their ability to make some revisions and recommend those to the commissioners.
Brian, since can you just read back the fixed income section of the allowable investments for the short term?
This is for the short-term component.
Right.
Allowable assets are fixed income, which is defined as U.S. Treasury and agency obligations only. And then cash and cash equivalents, which is essentially treasuries. So it's the definition that is constraining us is the fixed income, because that's limited to U.S. Treasuries and agency obligations.
Yeah, so that's where the variance is, because within our code that I'm reading at Eco 360, which obviously with Gary saying is not up to date, it also allows for corporate bonds, bond fund, collateralized debt obligations, collateralized loan obligations, asset-backed securities, provided that they have an A- or better, or the weighted average credit quality of the portfolio is A- or better. So I don't know why that was stricken from the policy to restrict only to treasuries and cash.
Well, it really goes back to the policy that Brian is reading from was adopted in 2015. That was a pretty comprehensive review, as I recall, of what the investment policy was. So, if there were some inconsistencies with what's in the code, that the old code, it was really the judgment of the investment committee in 2015 that, what Brian is reading from was the appropriate way to go. Now, again, this is something that the investment committee has the ability to suggest changes to, and if they think that's appropriate, then go right ahead and do that. I think that's certainly the function of this committee.
So I think that is the goal here for Jimmy's suggestion. I would propose that we change the fixed income definition so that it's no longer restricted to U.S. Treasury and agency, and we extend it to also include fixed income, investment grade, A- or better. Is that what's in the code? Single A-?
It is, hold on. All individually held fixed income securities, mutual funds, and any classes of structured securities held must be rated A- or better by 2 of the 3 major rating agencies. The weighted average credit quality of the portfolio shall be A- or better.
Double A-.
Right.
We want to make another motion and keep going forward here?
Yeah, why don't we, I would propose that we adopt that language straight out of the code that Bill is reading from and use that as the definition of fixed income. And that should open up the proverbial floodgates for Dominic to do something a little more, slightly more aggressive. Still pretty well constrained at double A-.
But it's better than cash.
Yep.
Better than cash, we hope.
We get a vote
Yeah.
here.
So do we have a motion to adopt the language from the code? This would be to change the definition of fixed income under the short-term component of the investment policy from December of 2015.
Yes, I'll put forth that motion.
Yeah, and I second it.
Okay, all in favor?
Aye.
Aye. I hear no no's. Sounds unanimous. The ayes have it.
And then just to clarify, this will go to the commissioners for vote, and then Dominic will be notified, and he could start within whenever the next time commissioners meet, or when would that possibly go to vote?
Not until the next meeting, right, Gary?
Yeah, it would have to be August. We can't do it
August.
tomorrow, yeah, because it's not on the agenda.
Okay,
Okay.
good. Let's make some money on that.
Bill,
Take a
do you
few
mind
bucks.
sending me a link to the E360? So
I'll
I
send
can
it.
just
Yeah, I'll send it right now.
paste that, and I'll make the adjustment and circulate it. All right, any other business? I think the last item on our agenda is just to confirm the next meeting dates, but before we do that, any other business that anyone on the committee wishes to discuss? All right, our next meeting, we have the second Thursday of quarterly month, so our next meeting would be October. Tell you the exact date.
14th is what I have on
14th.
the calendar.
That is, yep, the 14th.
Is Dominic still on the phone? Or do you have to hang up?
I am.
Oh, there you are, Dominic. I didn't see you.
Nope.
You're right in the middle.
I'm here.
You're like the ketchup bottle. I was curious as I went, is it possible to have our performance, the performance report that you just showed tied to link up to our fiscal year versus a calendar year? So we can see the performance from 4/1 on, just so we can look at the same periods that might help out from an audit perspective, or would that be too painful?
I can check.
Okay.
I don't have the answer, but
I don't want to create work, but I didn't know
When-
if you had a toggle between calendar and fiscal. It just might be a help us from a financial statement perspective.
I can certainly check. And when does your fiscal year run?
4/1.
4/1. Got it.
So luckily it
I'll
is
come back to
the
you.
quarters, so hopefully it's not too bad.
Mm-hmm. Sure. All right.
Okay, I think that does it for today. Do we have a motion to adjourn the meeting?
I make a motion, we adjourn the meeting.
Do we have a second? All in favor?
Aye.
Aye. Unanimous.
Okay.
Okay, thank you, everybody.